Hello. Last week, when US Fed announced about the rate decisions, Nifty suddenly dropped 400 points, and also when Trump announced about the tariffs, stock market dropped suddenly. But a war is happening 1000 kilometers away. How does it affect Indian stock market? And also, tension started to arise in the Middle East. Oil prices shooted up, and your petrol bill hurted you again and again. So, in today's video, I will tell you how US stock market, geopolitics, or their Fed rates affects Indian stock market. How does it affect Indian stock market? So, make sure you stick till the end. India is deeply connected to the outside world, and also we almost import 85% of oil from other countries. We also sell clothes and also medicines and software to US, and foreign investors pour billions into the Indian stock market every month. So if something big happens in US, that will directly impact our rupees and inflation, companies profit, and mainly the Nifty 50 and Sensex. So let's break it down step by step. The Federal Reserve or a Fed rates. This is actually basically it's an interest rate in America. In April 2026, it is stood at around 3.5% to 3.75%. So if Fed rates are high, dollar becomes stronger, and also many investors pull money back from India and invest in US markets. So because of this, the rupee depreciates, and also this creates pressure in the Indian stock market. Suppose, for example, last month when Fed rates announced its decisions, SGX Nifty fall around 500 to 600 points, and this created pressure in the Indian stock market. So again, if Fed cuts their interest, again money flows into India, and again market goes up. So this is one of the actual reason why US decisions affects the Indian stock market. Tariffs. These are the extra taxes that America puts on the goods coming from India. In early 2026, Trump puts high reciprocal tariffs of around 25 to 26% on Indian exports. And this created pressure in Indian companies. And Indian companies suffered a lot and the stock prices fell. And our products became expensive in America. So in later February 2026, they came to a negotiation and they reduced it to around 18%. After that, and slowly markets started to recover. The sectors that are affected by this are IT, textiles, pharmacy, gems and jewelries. So high tariff creates pain in exporters, and also this creates pressure in Indian stock market. Geopolitics, wars and tensions in the Middle East. When there is a conflicts in Middle East, like recent conflicts like Iran and Israel related tensions, the oil prices shoot up a lot, sometimes crossing around $95 to 100 per barrel. India imports lots of oil from other countries. So because of this, the prices of petrol and diesel went up a lot. And also inflation was high and companies faced high cost. So if there is an issue in the Middle East, so this creates a pressure in Indian stock market and the stock prices goes down and it creates pressure for factories. So this were the three things: tariffs, geopolitics and Fed rates, which often work together and creates ups and downs in the Indian stock market. But India is also strong in good domestic growth and has high forex reserves. So we usually recover in the long run. So by this we come to an end. So these were the reasons how US decisions affects the Indian stock market. And don't forget to hit a like, share and subscribe to this channel for more such finance and stock market related contents. Thank you.